Good morning, Helen. I'm here with you, and it's a great pleasure for us. You're a partner at PANTHEON and also a member of the Global Investment Committee. Would you like to say a couple of words about yourself?
Good morning, David. And first of all, it's an absolute pleasure to be here at IPEM. Very happy to be here. I was actually at the first IPEM conference several years ago, so it's very nice to be back, particularly after the pandemic. So I'm a partner at PANTHEON. I've been at PANTHEON for 19 years. I sit on our International Investment Committee. PANTHEON is a global private markets investor, been around for more than 40 years now, although I haven't been there for that long. And we manage around $90 billion in assets under management in private equity, private infrastructure, private credit, and a small amount now in private real estate. So diversified private markets.
Very impressive. That makes you the perfect person to discuss the questions that I have for you, which are mainly around fundraising. So do you think in the current environment, fundraising is more difficult? And have you seen this before in your long experience?
Yes and yes. Yes, fundraising is more difficult. I think fundraising is more difficult partly because of the denominator effect. So many large institutional investors now find themselves over-allocated to private equity because their public markets portfolios have gone down in value, whereas private markets have actually held up in terms of their value. So they find themselves over-allocated. That's true in private equity and in private infrastructure as well, actually. So investors are now sort of struggling with, do they ride this out or do they sell in the secondary market? How do they get out of this particular environment?
So, and if you were a GP, what key factors would you put emphasis on in order to have a successful fundraising?
Well, that's a great question. I think that in this particular environment, the dispersion between the best GPs and the poorer GPs will become very apparent. And therefore, if I was a GP, I would very much focus on all the strong attributes that I have, but also perhaps on my expertise during the past downturn to show that I'm capable of managing a portfolio through more difficult times.
So, and do you think that's also what LPs are going to look for?
Absolutely. I think LPs in this market are going to be very selective. I think that we've had some, frankly, quite easy years for fundraising. I think it's going to be a little bit more difficult now, and I think that LPs will be looking at all the things they normally look at, but that lens and that focus is going to be even stronger because there's going to be fewer dollars to go around, or fewer euros, fewer pounds, and therefore I think it's going to be the strongest GPs that will be raising the money in this environment.
You just said that fundraising before was relatively easy. Do you think GPs were raising funds at too fast a pace?
So investment rates were also quite fast. So that meant that investment periods shrunk a little bit. I remember a time when investment periods were even sort of closer to 6 years. It had shrunk down to, in some cases, 2 to 3 years. So certain GPs were coming to market quite quickly after the last fund. That made it quite difficult for limited partners because LPs have to look at, clearly the previous fund's performance. If it's only been around for 2.5 years, and if some of the assets there are not even a year old, it becomes much harder to judge performance. So clearly LPs look at a string of past funds, but when they look at the last fund and a lot of it is still valued at cost, it's quite difficult for LPs.
So you would basically say the answer is yes, the pace of fundraising was a bit...
I think in general, I think some people were more disciplined than others, but I do think that created problems for LPs, and I do think as well that it had an effect on allocations. So a lot of LPs really pushed out their allocations, I think, and now clearly that's sort of unwinding a little bit.
And you said deal making was also at an accelerated pace. So now that deal making seems to have slowed down. Do you think that's going to have a direct impact on fundraising?
So I think it will have an impact. Deals are still getting done, to be frank, and exits are still happening. But again, I think it's probably the best assets which are being exited at the moment. Assets which have no issues with them, which are very well positioned in this environment. So yes, there's a slower environment in general, and that means there's going to be a period of adjustment for GPs and for LPs.
And for the success of an investment, talking about the deal making, what do you think is more important for the PEs, the macro factors or the micro factors? And are macro factors maybe a bit overrated in the general narrative?
So we were just talking about this in the prior panel. We were talking about macro and micro. One thing I didn't say in the panel is that when you look at correlation between GDP growth and private equity returns, there's very little correlation actually. So a more difficult macro environment, I think, simply means that the better GPs will do better, and the poorer GPs, are not being lifted by that rising tide of sort of stronger GDP growth. But I certainly believe that in this environment, dislocation and disruption, there's a lot of opportunity for private equity. But the best GPs are the ones that will be able to capitalize on that.
So having said all that, if macro is not as big a factor as some people make it out, do you think it's more important for companies to pick specific sectors? And what do you think these sectors could be that are the most interesting?
So I think micro is really important. Clearly you have to operate within the overall macro environment, but I suppose what I would say and what we were saying in the last panel was that it's your choice of general partner, private equity manager, that can really exploit what's going on in the market at the moment, with the macro factors, with what's going on. And then it's also about the sectors and about the subsectors and also about the choice of the company within that subsector. So it's all about that micro choice, which is the company which is well positioned, where you think you can really develop the value over the next few years. Now, for your question in terms of the sectors that we like, for the last few years actually we've liked 3 themes. So digitalization and automation, aging demographics, and sustainability and energy transition. Now each of these themes is going to be around for several years, so it's not a flash in the pan. Digitalization and automation, really interesting because it also plays into efficiency. Enterprises need to be more efficient, and it's all the boring technology, the boring ERP software that companies, SMEs need to run. So that's a big theme. Aging demographics, I probably don't have to explain, that's a big theme, and mostly in the developed markets, although we also see emerging market interest there. And then sustainability and energy efficiency, it's really just come to the fore over the last sort of year or 18 months because of what's gone on with the energy crisis, particularly in Europe.
Well, you know where you're going to invest. That's very good, probably very reassuring for your investors. Do you think this qualifies as a crisis? I mean, when you compare to the last global financial crisis, or do you think the Monica crisis is overdone? I mean, is downturn a better word, or how would you frame it?
So I'm not an economist, so
no,
I
know, but
I'm an engineer, so I'm not an economist, so I can't compare all the different factors. What I would say is that every crisis is different,
yes.
And it's sparked by different factors. So this crisis is different to the last crisis, it's different to the COVID crisis. But remember, we lived through that with private equity. Public markets sunk by 30%. Private markets, probably single digits and bounced back. I am quite confident this time around as well that private equity and private markets will find ways of working through this particular set of factors that we see in the market.
Thank you, Helen. Very good to end on such an upbeat note. Enjoy your conference.
Thank you for your questions and enjoy the conference as well, David.